MMT, here we are, 10:05 a.m. Pacific Standard Time. The date, 10/30/2011. One of the things that we would like to bring to your attention is the weekly standard public analysis chart, and that's on Priceline. And Priceline is hitting a major wall of resistance, and that's what it looks like to the public. And the 10-week moving average is pointing up, MMTs, and that's a wonderful thing, because that means that the pullbacks will be strong on Priceline. But let us not forget, everybody, the reality is it's an earnings play, and there's going to be a lot of volatility going into November 7th, 2011 is when it's going to report after hours. So the people that ever view the video, but the MMTs, you're the most important one, you're going to know how to get this trade. And it's going to be a 520 call versus a 520 put, and we also know that, MMTs. But right now, that's a standard weekly moving average that's going up toward the 20. When it crosses, it's going to be stronger in the public analysis world. So that's how they make decisions. Now, on the other hand, what will also happen over here is the 520 call would go up in value, and that the call option on Friday had a low of $20 now, and it had a high of 33, and it had an open though of 27.80, but it closed at 31.60. So it's closing from the low where that market was made. There's still a $5.60 premium positive ratio trade up to this resistance area right here as far as the 520 call goes, MMTs. But then on the flip side, you can see over here, MMT, it's a 520 put bar. Now check it out. When we were trending in the directions with the directional price movement of the equity side, is where you can see at times where that put option had a value at lows over here. Let's take a look at in the frame here. The lows were 28.90, the highs were 38. This last high peak that was set over here on 1026 MMTs at 35.10 was the open, and 49.80 was the high. But guess what? On 1026, that low was only 35.10. So we can tell in the last 5 trading days that the put side did have a breakout, and the put side is back down here in value. MMTs, the most important thing that we would want to know is why that put option could drop down to $10.50 on the very low end. In the shorter time frame, it would hit somewhere around 17.80 and then start dropping down into the mid 15.70 handle. And if we go that direction, that means that Priceline would have to break much higher for that to go much lower. That's in the 520 put, and we know that. But we know on the flip side over here that the 520 call would go higher, and that the actual highs on your calls over here on 927, they were still 43.70. Now, there is still a yield from the closing print of 31.60 to those highs, but in order for that to happen, then here's the other piece to it. In your weekly chart here, in your SMF platform, nonetheless, this is going to be the resistant area right through here, this whole area. This is where that first yearly breakout happened, but right now this area is your main concern. And the thing about it is, if you're going to apply the 520 call, you would want to look up here and say, well, okay, if I come up and challenge one more delta, that's $13.73 per line. If I do that, what would that 520 call be worth? Okay, now granted that the 520 call, unfortunately, that's this one here, you got to remember that from the closing price to that low, there's $5.60 below you on the call. It's had that much premium value going into Monday. Today's date is 10/30/2011. Time is 10:10 a.m. Pacific Standard Time on that 520 call. Now, if we don't take out these major resistance levels, in the equity side, then the calls are going to have a hard time getting through here. But that's the potential upside. That first line right here is $40.09, and then right up in here, you could say that you would be looking at right up the top of the bar there was 43.70. All right, and that's right here. That's the top of this bar. The other bar that goes over here now, that's up here at $50. Okay. There's another bar, and it starts up here at 50, and that's the lows. So the lows of the calls MMTs on that 520 already for, remember, it's a November 19th monthly expiration, and the low is $9. And right now they're over here at $31. So this was a time from $9 they traveled right here, and we traded them every day. So we know the high was $27.95. And the lows in here got down to 20 and 11, but here's where the last low was, and that was at $11. Okay, so they moved $20 from here, and you know that's always the downside part of the market. That's why it's important that we're looking at the put side of the market here, the 520 put MMTs. It's very important for us to know that why this would go back up in value, but then why would it go down in value? And for the very same reasons. The highs over here, once again, were $49.80 on that 520 put MMT. And the current low that it got down to was $27 from that number in this 3-day time frame. Okay? The lows that were over here on 1024 were $28.40 MMT. Okay? And these same lows right in here, $28.90, and those lows there was $27.70 MMT. Okay? And that low right there finally got down to the bottom of $27 a contract on this 520 put on Friday. So we can see that the went from 33.8 down to closing at 27.70 down toward the intraday low. That means that Priceline equity stock is very strong right now. And once again, MMTs, we can take a look at it here on a daily platform. You can see that these same diamonds on a daily level in our MMT platform go right across here. So you got to start taking a look at where the evaluations are and what it takes to get up here to half deltas, which is 1 delta. That's up here. And this is where your next major challenge is going to be, MMT, as far as the Priceline equity goes. So we're at this level, but how are we going to get to this level here? And what will be the value of this put option if we break up 2 deltas? Where does this put option come down to? Well, we already said we'll be looking somewhere around this, taking $10 premium out, somewhere around $17.70. Of course, you'll have pit stops on the way down around 19.5 by 20.90 between the bid and the ask. Remember, this is Sunday. This is before the fact. So that's based on us breaking 2 half delta lines up. Would bring this down there. Then the lower end of the contract could get down to you could start trading down there between the 10.50 area and the 12.20 area below the market. That's based on going up in these delta ranges and testing these tops up here now. That's why I have your SMF platform in here, because it's going to take that half delta expansion. That's 1, 2, 3 half deltas. That's your upper end. Then you have your 1 and your second one, so that's going to be your upper end as well at 540. But then again, you got to get past this one right here, these diamonds, okay? And you have to close above this whole area right here, going straight across, right here to where the last part of breakouts were occurring, and where corrections, pullbacks, whatever you want to call it, short trades were happening, testing breakouts and going higher, but making lows again, but then selling up and making the all-time lows down here at 411. And we're back up here going into an earnings report November 7th. So once again, we have to close above this diamond area right across here, and we have to consolidate above it, because MMTs, you have to consolidate at a higher price level, and you have to close in higher price levels. So that means at the upper end of the trading ranges, 2-half delta up is right up here, right below 540, right here. That's that one. So we got to get past here, and we will tomorrow. We'll see. If we go up and we fail, then that means that we would be buying the put because it would pay. But then again, if we break out, so if we were to break down and fail and start down here and breaking support levels, we would trade intraday the put side and then try to steal the call side is still very strong. So we would have, if that was the case, we'd have bids out here at, let's say, 27.50. Okay, they close at 31.60, so we'd be down there. And the other thing of it is that we'd be buying the dip here and then selling it as it popped up there. Whatever type of movement we have tomorrow morning and throughout the new Monday through Friday trade that's going to start 10/31 of 2011. Today's 10/30, you know. So we're going to trade these calls and these puts, and we're going to use the weighted one is the weighted November monthly expiration. We can clearly see how these calls have broke higher up at the highs, but then again, we're down here at the lows of the 520 put. 520 call, 520 put, and we're at the lows. In order for these to break lower, you have to break through, the equity has to break through resistance, and you'll break through here on the calls. And there is an intraday trade on a market maker trade every day that you got a 37 and 11. You can still pull $4 out from the wholesale back to selling to the retail within this area here on that 520 call, providing that once again, when I get back over here to Priceline daily chart, Priceline weekly, you can see that resistance. That's the major weekly resistance. And then up here. So we know one delta is there on the weekly. We also do know that MMTs, we know for a fact that the daily is right here. And we're right in the middle of where this gap down occurred. Look at that diamond gap down, that volatility bounce. We have to close above this area right in here. Okay? And that the half delta or 1 delta and a half, you go up a delta and a half, that's good because that's going to help take out this area. It's moving a delta and a half up in our brain, and all this price congestion, that was some real good volatility back in these days, as you know. You were there trading it, and so was I. So this is it, MMTs, and that's going to be dependent now on how both the call and put trades, and basically here's your call chart, put chart, here's your call chart. So your puts are at the bottom, but here's your daily resistance level right in this gap area. Okay? And what has to happen is we would like to go up a half a delta and break through here, but the higher that we can consolidate at least a half delta higher, the more strength we have in, the more that the call value would go higher and the put value would decrease in value. MMT's trade management starts tomorrow morning. We will be using the 11.4 weekly versus watching the 11.19 contracts to weight it so that we can still transact the weekly. They trade in totally different element. But we can clearly see closing on the highs up here, not up toward the highs, and close it on the lows. 520 call and the 520 put, and that's the last 5-day price action. And this here, once again, from the lows to the highs, and it kind of looks just like the Google chart, and lots of them. But it's going to take stocks barreling through these resistance levels and getting above these gap areas right here that were occurring back on these days. When that day is MMT, I'm going to tell you right now, that was on 9/21/2012. All right? So it's going to be important that this congested area is that it consolidates, goes up, holds it, breaks out, makes higher delta highs. That will take these contracts up in here and the put options down. Trade management starts Monday morning on Priceline, both calls, puts, and the daily chart and the price action movement and the interpretation between call and put strategies. Thank you, MMTs, for being patient on Sunday and getting prepared to get on whatever side of the market works, whether call side or put side.